Hello and good evening, everyone. We look forward to you seeing in the 13th open house session, which we have today, which is on offsite inspection alerts. I'm Abhishek Walawalkar, part of the member relationship team, and with me we have our colleagues from regulatory inspection side, Renu Bhandari and Naresh Savana. So thanks Renu and Naresh for joining in for today's session. Again, this is one of the feedbacks which we had received across our discussions with members that this is an important topic and members had actually indicated their preference to conduct a webinar or an open house session on this particular topic. So before we delve into the questions, I would like to say a big thank you to all of you. We have got a very overwhelming response over the last 12 sessions that we have held so far. Just from a numbers perspective, we have received over 800 to 900 questions from all of us, from all of you, and basically 3,500 members as in the end people across all the members have participated in the 12 sessions so far. So this is really great. In fact, what we are doing is we are creating the repository of the questions, and as and when there is possibility, we are able to release additional FAQs, which will further help provide clarity on certain ongoing points. So with this, let me just quickly start into or jump into question number one. The first question that we have received today from CNB Finviz is there are multiple alerts on the EOD margin and peak margin shortfall. So basically, the issue mainly pertains to the T-bill security and the value which is taken by the exchange in such instances. So in the T-bill, the member says that the haircut as per the exchange file is 2%, but as per the instances, it seems to be 10%. And the security values are always taken less by the exchange, which is different from the securities file which is provided by the exchange. So yeah.
So Abhishek, while generating any alert, wherever VAR needs to be considered, we consider the CC file, which is given for VAR calculation, etc. For this member, you said CNB Finviz has raised this query.
Yeah.
So for CNB, we've not seen any alert on this account. If anything is there, they can connect with us. We will have a look at it. Because we are considering the CC VAR file.
CC VAR file. So noted, Renu. So I would just request you to probably drop a one-liner to the regulatory team, the inspection team, and probably copy your RM as well, and we will check internally and get back. Moving on to next question. This is from Rally Trade Stockbroking. With respect to MTM alerts generated, member claims that they have given explanation to the team. However, the same alert is getting generated again and again.
So I would like to give you one clarification on MTM alert. So there are two types of MTM alerts which we are generating. One is proprietary MTM loss and second is client MTM loss. So it is not in fact an alert. I would say we generate such data wherever there are losses in client accounts and whenever pro losses are there with the member, and we seek clarification data documents to see if proprietary losses are met by their own funds. And similarly, client losses are met by the client respective collateral only. So this is not going to be stopped because every month we have to generate, and it is an ongoing basis. We are generating the alert and we need to seek details. And based on the data, we are closing such kind of alerts. We have in the past found some serious observations around these alerts. So this is an ongoing process.
Which will continue. So thanks, Renu, for clarifying this. Moving on to next question, that's from SBI Cap Securities. Whether MTF and non-MTF debit will be considered for total debtors balances. This is basically for enhanced supervision and CC report, or is it the only non-MTF debtors will be considered?
See, while reporting any data for debtors, we should consider both debtors when we are reporting enhanced supervision data. Anyway, we know that this enhanced supervision data is a duplication because we are anyway giving a segregation data, and we are in touch with SEBI so that this reporting can be discontinued. Recently, one industry standard forum has been formed where also we have taken this as a feedback suggestion so that we can stop this reporting.
Thanks, Renu. I think it's important for members to note and probably be aware of this industry standard forums which has been formed recently, and all similar matters and probably any other initiatives will be run past this particular committee before it is discussed with SEBI and it is being rolled out in the market. So thanks for clarifying this. Moving on next, it's member receives query multiple times on non-settlement of same set of clients along with probably exchange asking or demanding proofs again. While it has been clarified that these client balances are transferred to inactive client bank accounts.
So before I answer the specific question, I'll give you background. How do we generate and what do we generate? So we generate alerts for clients who have not traded for past 30 days and their accounts have not been settled, which means their money balances are remained with the broker. We generate these alerts. While generating these alerts, we exclude those people who have been reported in the data as unclaimed funds. Wherever they are not able to connect with client are reported as unclaimed funds. So while generating alerts, we exclude these people from our alert. So what they need to do, they need to report these people. If we are asking again and again, which means that they have not reported these people as unclaimed. So if they report it as unclaimed, we will not be including these clients into the alert we are generating.
Got it. So this was the question which was raised by Composite Investments. I hope this has been adequately
so we'll not
clarified.
Be asking again and again because if reporting is not done, then every month the alert will get generated.
Thanks. This is very helpful. Another question comes from Kalash Shares and Securities Private Limited. Out here, the member is asking that if there is any respite for members having less number of active clients, if the active clients are less than 25, then the member does he need to keep up with the compliance and the inspection in line with the total number of active clients?
So Abhishek, as we all know that the compliance and the SEBI circulars are applicable for all the brokers, irrespective of how many clients they have. As long as the broker or the member has the client, they have to fulfill the requirement. But specifically when we look at if there is no clientele, definitely there are various requirements which are not applicable to a broker. Like if a member is engaged in only in the proprietary trading and not having any clientele business. So there are in various reportings or various submissions, there are exemptions for such brokers. So they can always give a one-time declarations in our system, which we have provided to upload the various submissions. So they give one-time declaration and they are not required to upload submission which actually not applicable to them. But if the broker has one client or 25 or it's a 25,000, the requirement would always
remain the same.
Because it's a question of safety of client assets. Yeah. So whether one client is having a asset with the broker or 25,000 or 25 lakhs, right, it's treated as safe.
No, thanks, Naresh, for clarifying this. The next question is from Aditya Birla Money Enrich Financials. Where the member says basically that the letter of observation from the exchange is received after a gap of 3-4 weeks, tentatively from the initial date of alert being shared with us. This creates a gap in responding to exchange for initial observation. Meanwhile, additional alerts get generated, and this in turn results in probable penalties or probably hassle for the members. So, is there any way out or probably any suggestion around smoothing this particular process?
Yeah, so alert itself is in the nature of a serious indication. So it is always taken on the priority, and the alerts are generated as and when alerts are shared as and when generated. But as we member has suggested, we will definitely take the note of this point and the process if there is any gap.
Yeah. Highlighted by a couple of other members as well, not repeating the names for the sake of it. So just moving on next, the next question is from Next Billion, Navia Markets. Same alert by multiple exchanges to the members result in duplication of penalties. The suggestion from the member is if there can be some joint alternative which can be worked on amongst the exchanges.
So yeah, we are already in discussion. We all exchanges are in discussion with that, and with also with member associations also. We are working on it, and so we are full of a positive outlook.
Okay, that's good to note. So if there is, whenever there is an update, probably we can share it with the members. Any tentative timelines around this, or it's probably difficult to share as of now?
As of now, there are various things along with this, we are taking various other critical matter also.
Okay.
So, but this is in the list, so we will surely get it sorted.
Thanks, Naresh. Very helpful. Moving on to next, it's from Tradewell Securities. While client is selling shares to clear the partial debit balance, alerts are being generated for shortfall, even though EPI has been done. Can NSE look at adjusting to avoid the generation of such alerts, or or even though the trade was nowhere linked to the commodity? Sorry, other exchanges are also generating such alerts, even though the trades are nowhere linked to the commodity segment.
So currently, we have developed, so whatever alerts that we are generating is are based on the various data which we receive from the members and from clearing corporations and from the depository. The fact that you have mentioned here regarding this EPI is also reported by broker and which is taken into the consideration. Now, with respect to the EOD margin also, if the broker does the EPI, then the margin itself, gets from the, from the clearing corporation only. So we do not generate an alert because there is no corresponding margin obligation. Yeah, if the member problem is specific to the peak margin, that we are anyway working on it and we will fix sort.
Got it. So you have heard this. I mean, if there is any further clarity required, feel free to write to us. But in case if it is pertaining to peak margin, then that is being taken up internally, and we'll look forward to come back to you on this point. Moving on, next it's from Tradewell Securities again. That's more of a feedback. Alerts email contain violation word even before it is being established. Can you look at using some alternate word, which is like an observation or anything else?
Yeah, sure. We've taken note of it and we will rectify this in future alerts we are sharing with the brokers.
So point taken. Thanks, Renu. Moving on next, it's from BN Rati Securities. When allocation is done for other CC, NSE generates frequent alerts. TM suggests to develop system where it can get data from other exchange as well.
See, we will have to check with CC. So, Abhishek, I would suggest that let us connect BNRT with the CC so that we can get this resolved.
Fine. So the request here is if you can just drop a one-liner to us, copy the RM, and we'll take up this particular point with the CC jointly. Moving on next again from BN Rati, offsite alert generated snapshot data does not match with SA04 snapshot values and snapshot record number.
Both issues
Issues
are
are
we
the
have
same.
to connect with CC.
Got it.
What kind of alert they have generated, we can resolve this issue
Sure.
by doing rectification in the back of the system of the broker.
Noted. Moving on next, that's from Northeast Securities. How to handle clients who are in debit and are selling shares, as there won't be sufficient peak margin since the client's debit is higher than the EPI value.
So in December 2020, we had given a clarification wherein we said that if EPI has been done and there is a peak margin, even the EPI is done end of the day, that will be considered as a margin. So accordingly, members will have to consider and report margin correctly.
Thanks, Renu. That clarifies. Moving on next, that's from BGSC Financials. Member has a concern over alerts being generated by MCX for NSE activated UCI. Said UCI are not activated in MCX, still alerts get generated by MCX.
So as you all know, what do? We generate alerts and the ledger balances are across segments. But whenever any client is exclusive to only commodity, we don't share such data with our brokers. So similarly, they will have to take it up with MCX if they are getting for NSE generated
Got it.
for NSE UCI.
Got it. So please note, this needs to be taken up with MCX at your end. Moving on next, it's Cholamandalam Securities. Certain observations are being captured in both offsite alert and onsite inspection, resulting in duplication of penalties. Any thoughts around this?
So Abhishek, before answering to your question, no, I would like to tell you about offsite these alerts, why we have done this. See, earlier the inspection used to happen once in a 3 years or once in a year. So it was, creating a regulatory gap. So that is why the offsite supervision, the concept has emerged. The reason is that so that we can on an ongoing basis, we can monitor the members. So currently all the alerts we are generating, it's generated at a very lesser frequency. If you look at, we generate various alerts on T+4 basis only, T+7 basis. The whole idea is that whenever anything happens, it should be, fixed, or if there is any systematic issue, then it should be fixed there only at the member end. And if it is any serious concern for us as a regulator, we should, fix there only, and we should take the correct, regulatory action then and there only. So that was the whole idea. Now, This question is, very surprising to me that, that offsite supervision alerts, which are also found in the on-site
On-site.
also is one thing why it is, getting captured in offsite, on-site also means because, and if it is any such particular case is there, the broker has to highlight because we have never come across such cases even in any sort of discussion with a member.
Got
So
it.
if this member has any particular things, they can share with us, it would really help
Sure.
us to fix to
So-
understand this thing in detail.
Because there is a possibility inspection is conducted for a larger period.
Ah.
And if we have already done the offsite and we've already levied a penalty or we've already acted upon it, so then we will not see that during inspection. And just to add, in fact, lot of areas we are now not looking in the inspection. We
Okay.
have excluded those. For an example, when we look at creditors availability. So what do? We do it online, all of you know. So what we do, we run this alert on a T4 basis. Now, when we are running T4 basis, all other data like collateral we take from the clearing corporations, bank data we take from banks, but the ledger balances are reported by brokers. So what do we do during inspection? Teams are supposed to look at the ledger balances are reported right or not.
Right.
So the areas have been changed while we do inspection. But I agree, if it is for the same period, same date, then of course, if it is highlighted to us, we will certainly not levy penalty and we will not take another enforcement action on it.
So point taken, as in for Chola team, if there is any such instance which has happened, please do write to us. Ideally, we don't feel there should be any duplication, but if there is any instance, do write to us and we'll take it
In
up.
fact, just to add one more, even if the same observation is reported by internal auditor in the internal audit, then also we do not levy penalty. We
Correct.
check the inspection data. If already for that particular period, for that instance, penalty has already been levied and now internal auditor has reported in the 6 monthly report, we do not levy penalty. We say that enforcement action has already been taken.
This is very helpful. I think this should clarify another couple of questions which we have received on similar lines. Moving on next, haven't received any specific name, but the question here is, please explain the calculation of G and net worth as per the recent guidelines of the exchange.
So first of all, I'm very surprised. This creditors availability, which is G, is being calculated now almost 5 years, because since 2016 the circular came.
Right.
If someone is asking calculation today, it is making me afraid also. But no issues. We will now give clarification. What do we do? See, it is very simple. All the ledger balances of the clients put together, aggregate value should always be equal to the money which is lying with the clearing corporation plus the banks as of now. After upstreaming, we are saying everything should be upstreamed, but still we will have to consider the money lying in the client accounts, which would be called as upstream or downstream. Reason is that because after cut-off time, some money would have been received in these accounts, which is upstream, or from the downstream, some amount would not have been transferred to the client. So therefore, currently, only the settlement account has been excluded. The money lying in client bank account, which is upstream or downstream, and the money lying with clearing corporations is being considered for calculation of creditors availability. Similarly, for net worth, again, this LC Gupta method is there since ages now. So if someone is asking clarification, let us connect with the member. I don't
Sure.
have the name. I would be connected.
Yeah.
But the calculation is very simple. We are looking at liquid net worth. Liquid means which is available very next day.
Yeah.
So therefore, we say that capital plus reserves minus there are a lot of non-allowable assets which needs to be deducted. When I say non-allowable assets are like if you have done any investment in unlisted security, it is not redeemable immediately, so it cannot become liquid. So therefore, it has to be 100% deducted from the net worth, which is capital plus reserves. Similarly, securities, which are marketable securities, we take a 30% haircut so that if you have to redeem, if you have to sell or liquidate immediately, you may get a haircut of max 30%. So therefore, this amount also is getting deducted. Again, we say a lot of people misses on these parts, therefore I'm explaining. One is on pledged securities. So if securities are pledged and we either have raised funds or not, but securities are pledged and we can raise funds. So therefore, we are saying these securities I can't liquidate. So therefore, these securities which are pledged should be excluded from
Excluded.
the. Yeah. So again, there are debtors which are 3 months old. Again, becomes kind of a bad debt. So therefore, those also should be removed while calculating the net worth. So there are these components, and we have issued a big list of what all should be considered, what all should not be considered while computing the net worth. They can have a look at the circular, which was issued, I think, 2021. After that, we've not issued any circular. So just look at that circular. If any further clarification is there, they can connect with us.
Thanks, Renu. This was a very detailed explanation. As she highlighted, I mean, it's been like few years since these particular definitions and the terminology has been clearly outlined and defined. Any further questions, feel free to reach out. The next question here is, please provide clarification for the alert generated when shares from designated director is transferred to the company for margin benefit. This is an off-market DP transfer mechanism.
Yeah, so Abhishek, where before, prior to the margin pledge replace system introduced by SEBI in 2020, the broker or the members are allowed to take the shares from the client for the purpose of margin in an off-market manner. But this system has been introduced, to the further strengthen the supervision model, because earlier in the earlier model, if the broker used to take the securities through the in off-market manner and start taking in their pool account, then it get mixed up the securities of the various clients, and then it is become very difficult for regulator also to identify which security belongs to which client. So that is why in the 2020 SEBI issued a circular that the margin pledge replace mechanism, whereby the client securities would lie in the particular client demat account only, and it would be place mark in the favor of the broker, and it can be further replaced to the clearing corporation or clearing member as case may be, so that whenever if there would be a complete trail for the regulator also, and for the broker also, and for the client also, in case if anything, any investor complaints come. So this was a whole idea, and this was the objective, and this is currently in place. So now, if the broker question is that with respect to for the purpose of margin, so I would suggest I would say that if it is for the margin purpose, then definitely the security should come from the respective client demat account only. It should be placed from the respective client demat account only, so that the CC and the CM would give the exposure to that respective client only. And if it is a prop, then definitely it should come from the proprietary or the own account of the broker, and it should be placed or replaced to the clearing corporation or the clearing member. So this is now, if with respect to, if the member has a query with respect to the off-market mechanism, I think the depository is the more right entity to answer this question, because they have various codes also for affecting the transfer of through off in off-market manner. So member may also seek guidance from depository also to have a clear-cut understanding on that aspect.
Thanks, Naresh. Moving on to next question. In certain cases, member is allowing APs to use member office space, what are the compliance requirement in such cases?
See, I would say in case someone is using broker space, which is AP, there should be clear demarcation so that any client who's coming and meeting, they should know that they are meeting either the broker or the AP. There are notice board, all these requirements are also in place. They should see all those are met, and there should be a clear demarcation.
Thanks. Moving on to next, in cases where registered and dealing address of APs are different, what are the necessary compliances for the same?
See, again, nowhere it is defined that my registered office and dealing office cannot be the same. It can be same even in the broking entity also. So there is no separate compliance for such requirement. But if it is in the office of the broker, it has to be clearly segregated, and all the formalities of notice board, whatever needs to be displayed for the investors' ease, that should be done.
Thanks, Renu. Next question here is, peak margin issues are raised in case of sale and early paying of transactions. Please clarify. Is there anything specific on that, or?
Yeah, so the peak margin, basically, I think this question is all previously we also already answered that if EPI is there, the EOD margin automatically get drops a bit the CC level only. But if it is a peak margin, we are anyway working on it, and we will
You clarified this.
This
Yeah,
was
thanks.
already
Yeah, absolutely. So the next, the member claims that they don't receive any offsite inspection alerts and want to know how and when where they are displayed.
So this is good, no? I think we expect this from all brokers. So if they're not receiving any alerts, it's very
I
happy
see.
state.
You
And
don't need to
such
be
kind of
hassled around,
programs,
you know.
such kind of sessions also will not be required if everyone is compliant. But we have traveled a lot. I would congratulate all the brokers also, because when we started in 2021 generating all these offsite alerts, the number used to be very, very large. And in fact, we used to run this creditors availability also on a weekly basis. Now we are running on a kind of daily. So, but the numbers have really gone down. And with the corrections in back office, etc., with the time, I think we will have only actual alerts, because currently also, if I say 60 to 70% alerts are generated for incorrect report.
Got
So
it.
that needs to be go.
Got it.
Then we will be with very few alerts. But I
Genuine.
congratulate the member.
Uh, Member claims that, okay, this is done. Member gives feedback that sometimes various departments or exchanges post different queries that demand immediate response. This becomes little challenging for the members. Can we explore the possibility of coordinated and collated queries for smoother responses?
Yeah, so Abhishek, I think see, alert is, it's unlike other requirement. Alerts itself, as the name suggests, it's an alert, so it should be, immediately redressed, because it's in nature of a, serious problem. It may be or it may not be, but it may be procedural gap also, but it may be a systematic or risky issue also. So that is why, for certain sort of critical alerts, we always ask data, and we also want that members should also understand the. But there are where the cases where we can give the time, we definitely give the time. But in case if member has anything specific for any alert, they may always reach out to us, and we will definitely take into the consideration.
Thanks, absolutely. Thanks, Naresh, for clarifying this. Another member has highlighted a specific instance. Recently, we are leaked that the trading member has incorrectly reported the client level segregation data to the clearing corporation stroke exchange. Upon closer analysis of the inspection finding, it was noticed that the inspection team included data from both the first and the second segregation files, which are uploaded to NCL for cash as well as FNO segments. This inadvertent combination of balances from multiple NCL uploads resulted in duplication. We received an advice on these counts for issues which are not attributable to our action. I think this is an instance which is being highlighted by the members for
So
our
answer
consideration.
anyway is
Yeah.
there in the question itself,
Right.
that they reported wrongly
Yeah.
twice. We have issued a circular also towards this, that please do not upload this again and again. And wherever we were finding, in fact, the incorrect reporting, we have given a clarificatory circular wherein we said that these are the issues which concerns which we are actually noticing, and they should rectify.
Rectify.
And Abhishek, added to this, we have also done the webinars also with various, large number of members on the segregation reporting.
Absolutely.
That how it is being consumed by us for generating various alerts. Because earlier we were generating the alert on the cash and cash equivalent submission, but now we have moved to the segregation because this is reported on daily basis. So the alerts are also getting generated at a very lesser frequency.
No, absolutely. I know this has been clarified. So thanks. Moving on to next question. As per SEBI guidelines, the MTF and non-MTF commingling is not allowed. However, we are receiving alerts for the margin shortfall considering the total amount.
So when we talk about margin alerts, we run this alert on a weekly basis for all the clients, irrespective of whether it is MTF or non-MTF, because CC never considers MTF or non-MTF. So therefore, whatever clients, number of clients are appearing in margin file, which is MG13, we run for all those clients. Now, separately, in fact, for MTF, I would suggest members to have the system in place so that they have maintenance margin also. Currently, we are not generating alerts for those, but in the time to come, we may generate for those also. But for the first day, when even it is MTF and requirement is as per CC there in MG13 file, that needs to be always available, and the alerts are generated based on MG13 file.
And for that matter, there is also reporting of MTF cash collateral in the segregation part. So that is also taken into consideration. So if any trade is, moved to the MTF trade, so that MTF cash collateral which they have collected for margin, that is also being taken into consideration.
Thanks. Moving on to the next question, a tricky one. Please share the logic in generating alerts at the exchange so that the member can make necessary changes in the system as well as avoid certain alerts or getting alerts from the exchange. Example is peak ledger balance calculation.
Yeah. So obviously one thing is that when we generate the alert, our regional teams or whoever the inspecting official, they always say the alerts and they always say the expectation, what is expected and why this alert has been generated. It is sorted out then and there only. But if anything where the member need any guidance, any member specific training is required, then I would request the member to reach out to our regional teams or to us, then we will definitely schedule the training for them, how the alerts is computed, what data points are used, and how how we are actually what response we are expecting from them. Now, with respect to like member peak ledger balance, since it has been specifically mentioned as you mentioned, so I would say that the peak ledger balance, the broker is report to the highest credit balance throughout the day. So if the highest credit balance in the ledger of a particular client throughout the day is treated as a peak ledger balance. Now, if assuming this client is in a debit throughout the day, then least negative balance throughout the day would be treated as a peak ledger balance. So this is the requirement. Now, if member is specific about the segregation reporting, then we would suggest that segregation is a segment-wise reporting. So they have to report segment-wise peak ledger balance. The methodology is same which they are currently reporting in the cash and cash equivalent submission, which is reported across all the ledger balances, across all segments. But in segregation, they have to report segment wise.
Thanks, Harish. Very helpful. Moving on to next question. In margin reporting alerts, collateral amount consideration is not happening. Kindly
See,
advise.
again, when we talk about collateral amount, we, as I told you, when we are looking at the creditors available,
Right.
we are considering the collateral which is available with clearing corporation, clearing member, and the balance which is lying in the bank account of the broker. For margin verification, we are not considering collateral available with the clearing corporation. Of course, the respective collateral of client is being considered, but that is the data we receive from depositories. We consider those shares which are under pledge, repledge. So those collateral we are anyway considering, and the client funds which are reported by broker to the CC under segregation, that was also considered.
Sure. So thanks. This clarifies. Moving on to next. Again, more of an advice. Member has been frequently receiving alerts for alleged incorrect reporting of margin collected based on the details of the client assets submitted by them to NSE through the collateral segregation reporting and daily cash and cash equivalents. 100% of these alerts are generated without verifying the details of certain early paying of securities, which are sold by the clients, and exemption from peak margin and EOD margin as applicable. Reporting to such alerts requires a lot of efforts and time. So is it possible for the exchange to verify this data before sending such alerts?
I think we mentioned.
Clarified.
We
Clarified this one. Moving on to next.
We'll have a look at this.
Sure.
Related to peak margin.
This has been clarified. I think a couple of or multiple questions around peak margin, and point is
So
well noted.
related to peak margin, we will have a look.
We'll have a look. Moving on to next, the member seeks additional support and details provision with regards to calculation structure for all the alerts provided to them.
So anytime, as Naresh also mentioned, we generate alerts, so we require evidence, we require supporting from broker also. In case member needs any clarification from us, what really they have to submit in support, we are always available. We can do a personal meeting, and anytime they can call us.
Thanks, Venu. The next is enhanced supervision calculation related. When compared with segregation files, if a client has taken payout or if a client has taken stock release post 3:30 p.m., in that case, data will vary, which is leading to alerts being generated. What treatment is given in such kind of a scenario?
See, I have not understood exactly the query. Reason is that they are mentioning about segregation file. So in enhanced supervision data, we're not taking any segregation file data. And in segregation, again, if they are reporting EPI values. So again, I would first clarify how EPI is considered. See, when we talk about EPI, somebody has sold. There was a question that I sold securities and how to consider the EPI. I have made EPI in the evening. So we have given a clarification in December 2020, wherein we said that if you have done EPI, which is end of the day, so this will be considered as collected peak margin.
Right.
So one is this. And second is, in case further exposure is given after selling a share and EPI is done. So in that scenario, all this will not arise. Reason is that when actually they have done the EPI and it has been accepted by depositories, only after that they can give the further exposure. And anyway, EPI value is also provided by clients in the data itself, which is being reported to exchange. So query is not very clear, but we have tried giving answer
Answer to the extent that we
related
can,
to
yeah.
related to EPI, etc. is done.
Thanks. Depository EPI cutoff on normal days is 9, and for exchange allocations, the cutoff is 8 p.m. Hence, many alerts are generated for EPIs post 8 p.m. How do we deal with this?
See again, if anything is being done by CC, they have
Yeah.
to tag it to us. But answer for both, I think same broker has
Yeah.
asked you the question.
Same.
Remains same because if EPI has been done late, etc., the EPI is considered in two ways. One is for peak margin, even if it is done end of the day, and second is for further exposure. So how it is considered only after depository has accepted, and then only I can give. So there is no question of EPI
Right.
getting accepted late, etc. Because once EPI is done, it is accepted, then only I can give the further exposure. And for peak margin, anyway, we have said that if
Yeah.
it is done end of the day, it can be considered towards the peak margin.
The next question here is on some days when depository system has issues for which DP pledge releases are processed late. Due to this, date changes and hence mismatch observations are generated. Members suggest if exchange can, for such known issues, uh, basically does not generate alert for such known issues.
Yeah, so Abhishek, generally, as I think member has talked about the exceptional situation. So we do care of the exceptional
Correct.
situations. So it's not like that, we will levy the penalty or we will put an observation. If there are exceptional situations like, in the November when the pain validation was started, so various member has got issue because where pain validation was not, happened properly at the depository and or various securities could not be pledged. In that case, we have given the benefit also. So similarly, if any exceptional situations happens, we always take consideration of member submission and we accordingly proceed.
So thanks. Moving on to next, member is seeking guidance on treatment to be given for corporate actions while reporting holding statement, that is the rights, bonus, split, OFS, buybacks.
Yeah. So with respect to the holding statement, I will give you the simple rule is that whatever is there in your demat account, you being as a member, whatever have in your demat account, just report that to the stock exchange, because whatever holding statement that currently you are reporting, that should be mirror image of what is actually available in the depository record. So whatever corporate action in whatever ISI and the name, it should be reported in the same manner to the exchange in the holding statement.
And they should also be recording all these entries in their back office.
Yeah.
Right.
So whenever any corporate action has come, so they should be giving the credit to a same client in their back office as well.
Because back office also should be in line with the demat statement on the depository transaction.
The next question is if you can guide us how to treat suspense or untraceable client funds.
Yeah, so now if I would like, although members are aware that with the implementation of upstreaming circular from July 1st, that all the members is required to upstream all the client funds to the clearing corporation. So this is also applicable to untraceable clients also. So if you have funds of the untraceable clients also, then you need to give it to the clearing corporation. So this is the one thing that, because here the questions is not very specific in general way, so I'm taking care. Now, as far as the reporting is concerned, untraceable client, then the balances should be reported in the respective client code only, the UCC. So the member should continue to report until it is given back to a ultimate client.
Got it. No, thanks. Moving on to next, this is more of a suggestion on enhanced supervision. NCDX and MCX margin data are not captured properly at the exchange level for which G alerts are being generated. We have received 4 such incorrect alerts in 2 months, based on which other exchange have initiated LPA on us.
So again, as I
Clarify
said,
it, yeah.
we said that we don't consider margin data. We consider the collateral. In case we've not considered the collateral of the LCDX and MCX while generating alert, possible that we would not have received this data from the
From the
respective
respective-
clearing corporation. But if it has been tagged, we will certainly get that corrected from, and we'll tag it to the respective clearing corporation as well. But it is not happening in an ongoing basis because we are running this alert on every day for all
Got it.
1100 plus brokers.
Got it.
So then the
Yeah, we could
alerts
have
would
got-
be huge.
Right. So thanks, point well noted. Moving on to next, we have been allotted 2 member codes for the same membership. It's difficult for us to manage the data. Many times, even if funds are available, alerts are generated and it takes a lot of time to understand and revert back to the internal management that there is nothing wrong. Please clarify.
We've understood. I think there are 1 or 2 brokers wherein different codes are there
Okay.
for their currency as well as cash and F&O.
Hmm.
So what we will do, we've taken note of this and we will consider before sharing the alerts with the brokers, number 1. And number 2 is I would suggest that let us take it up with the respective department also, so that we ask SEBI to make one code
Right.
for these brokers. So
Right.
let us strive for that also. We will take it up with our respective department as well.
So the member hasn't mentioned their name. We have got the name of the person who has posted the query, but not the member name.
Okay.
So whoever has posted this query, probably they can write to us and we can take it up
Yeah.
accordingly. Please provide FAQ giving complete guidance with examples on MC and MF calculations. This is required and important as things keep on changing frequently.
So here, Abhishek, I think member has asked for FAQ, but he actually want to give some good. We are trying to give some good news to the members that we are actually in discussion with SEBI to remove this requirement of reporting also, because with the implementation of segregation reporting to a clearing corporations, the reporting various the enhanced supervision. This requirement of enhanced supervision has become little bit redundant. It is no more required because this MCMF data which currently members are reporting are used for just just to arrive that the funds of one client has not been used for another client's margin obligation. So currently the clearing corporations are giving exposure to the client to the extent of allocated funds only. They do not consider free balance of one client for the exposure of another client. So this is being taken care at this level only. So with this rationale and the logic, CB has also agreed to this, and now this has been also taken with the industry standard forum. So this
Got
is
it.
also being discussed, and we are hopeful that we
This
will
will
come
get cleared
out.
soon.
Yeah.
Yeah, that's really a good news for the members. Moving on to the next question. Member raised a concern that they receive 15-20 alerts on a regular basis. At times it gets generated on weekend. Any
So
suggestion?
there is, I feel it is very serious concern for me as well when we are looking at, although our team also is connecting with the brokers where high number of alerts are being generated. But I would request that let us speak to this member and we will give necessary guidance so that these alerts are
Alerts are not-
eliminated.
Yeah.
Because the objective is that there should not be any alert at all.
So
And
again,
at least these alerts should not be on account of incorrect reporting.
absolutely. I mean, 15-20 on a regular basis is a
It's
very high number.
High number.
So the name is Pranil, but the member name is not being posted. So the requisite person can actually reach out to us
Sure.
through the RM or through the relevant inspection team. Member shares a feedback that inspection teams send email for seeking data, and the data and that way they want the data on the same day EOD, which at times may not be feasible on certain scenarios. If the exchange can help streamline and categorize the provision requirement. I think we answered this, right?
Yeah.
Normally we give time,
Right.
but sometimes we are also.
Naresh and Renu have answered this. At times, if you feel that there is,
We give extension as well.
Absolutely. And this can definitely be considered. So please do reach out. No issue whatsoever. Can the compliance team only raise requirement for member-specific compliances like applicable to only prop members and not requirement related to client business?
See, again, if you talk about prop brokers, if you are doing only proprietary, there is a one-time certificate, which
Right.
Naresh also mentioned some time
Clarified
back,
earlier.
that you can give that kind of a certificate, or you can give us those confirmation one-time declaration, we call
So
it.
then, yeah.
And then you are not required to
Required to
report all
submit
those
the
client
client.
assets related submissions. But if you have even one client, you have to
Yeah.
go by all the requirements
Necessary.
which are applicable to clients.
So just another feedback, some of the alerts are generated are very basic, like margin shortfall, and which when case is studied, sufficient supporting is there. If such cases are clarified by member and enough supporting is given, can such alert can such alerts be stopped in for future cases?
See, first of all, I would say that margin shortfall alert is not very, very basic. It
Basic.
is very serious because as per requirements, upfront margin is required to be connected. If it is not connected, it is serious because it's a risk to broker system as well. But in case after giving a clarification, there is no action or we've not done anything or no enforcement action is taken, then in those cases, we do the fine tuning. But as of now, because as I said, we have been running this alert now
Right.
almost 2 years now. So we have done the fine tuning and there is no fine tuning at present which is happening. If anything is there, they can tag us if it is on an ongoing basis so
Right.
that we can rectify and we will not be sharing those alerts in future.
And if you
Okay.
look at Abhishek, so far whatever questions we have gone through, only margin, only one peak related issue is there.
Right.
There is no other issue has been any. And this alert has actually, because of this alert, the margin shortfall as cases have gone down substantially.
Because otherwise, all brokers would have raised.
Right,
Naresh
absolutely.
is trying
This is
to
one of
convey that no one else is raising any
raising
other
this
issue than the peak margin.
Again, the person's name is Smita, but the relevant member can probably reach out to us, and we'll help clarify. So
Yeah.
member has experienced another question. The member has experienced instances where after sending reply to the alerts and sending supporting, alert does not stop and the reminders are still being sent. I think again,
I
we
think
try
we
to, yeah,
explained even in M2M also.
exactly.
So M2M is one such alert that we'll keep taking clarification, which means that we would like to always look at that the proprietary losses and client losses are met by their own funds only. So therefore, we'll be asking this information. Please do not treat this as an alert. It is an supervisory obligation on us, and therefore we need to take this data from the brokers.
Moving on to next, previously BMC deposits were considered for calculation of G score. Subsequently, it was not considered and related alerts are being sent. Even penalty at times is being charged for the older period. The same clarification was taken in previous inspection as well. Please assist.
But BMC we've never considered. So I
All
don't know
throughout,
which,
yeah.
yeah, all throughout. So they can raise us what exactly and what incident. We will have a look because currently also it is not being considered. Say the clear logic is we are saying this is a client money.
Yeah, yeah.
So client money cannot be my own deposit given for the membership.
Yeah.
So therefore, this even this BMC we have never considered, and in future also we are not going to be considering it. Some part of membership deposit is being considered towards the client payable, for which also clarification may come in near future that that will not be considered because again that is a part of
the
membership requirement. While taking membership, you have given this money to the exchange because you are a member of the exchange.
Fine. Again, this is a question from Anup. I would request, everyone who is posting the question, if they can mention the member name, it's easier for us to call out. But having said which, the person, whoever it is, who would be attending this call, he can raise this particular thing. I mean, having said which, Renu has mentioned that the PMC deposits were never being considered, but if still any further clarifications are required, to reach out. The next question here is, while generating alerts for margin shortfall, the file used by the inspection team doesn't match with the member file. Member file takes it from NCL and there are differences in value. Member asked to incorporate universal calculation file used by the inspection team so that there may not be any further differences.
So Abhishek, the margin requirement is across segments, across exchanges. So whenever even member is looking at any margin file, they have to see not only NCL file, all the files
Across.
which are shared by all the clearing corporations. So that is what we do at NSE. What we do, we don't only consider NSE NCL file, we consider all the clearing corporation files. And then the total of those is compared with the depository data,
Yeah.
like shares and pledgery pledge and the data reported in segregation file. So while they are doing, they also need to consider accordingly, and they can't only be considering the
NCL file.
NCL file.
Fine. Another suggestion here is if the inspection can be conducted in the first week of the month so that the observations found can be taken care of and mistakes can be avoided in subsequent days and weeks.
So as I said, offsite supervision monitoring is an ongoing job. So we can't do it first week of the month or second week of the month and then analyze of the entire month. It is an ongoing exercise. What I would suggest, whenever alert is generated and we take clarification from the broker, they can rectify that so that subsequently alerts are not generated.
Might be just an overlap for a week or couple of weeks, but once it is fixed, it won't get
Yeah.
generated in the near future. The next question, question number 48, it's in many instances, alert generated require clarification from CA stroke auditor, for which it takes some time, but we are expected to respond by the next day afternoon. Accordingly, can the timeline be, considered or allowed in such cases?
So Abhishek, I'm actually wondering why, because none of our alerts, calls for a CA certificate or auditor certificate. We never ask because it is a direct submission from a member, because whenever the alerts are generated, it is shared with the members, and this is their explanation. We identify whether any observation persists or not. If there is no observation, or and if there is an observation, it is definitely taken, for the necessary disciplinary action. So as far as the processing of alert is concerned, there is no, we never ask for any CA certificate, audit certificate. In fact, our inspecting officials, analyze the data and they point out the observation.
Okay. So again, this has been raised by Kundan. You can reach out. There is no specific, as has been clarified by Naresh. This is definitely being considered, and the CA or the auditor certificate is not being
At
asked.
least if we come to know that in which alert
Which
we
alert?
are seeking the CA certificate, we
Got
can
it.
address it.
Member request more clarity and supporting based on which alerts are generated, with motive to avoid any future mistakes or violation. I think this is more of a suggestion.
You can arrange a meeting. We
Yeah.
can arrange a meeting.
Right.
So not an issue. We keep doing meeting in a group
Right.
of brokers. Even we call back office
Back
vendors
office
also.
vendors.
So we can do a one-to-one meeting or a group of members also.
Got it.
Most welcome.
Another feedback, member conveys that in some instances they are required to provide data by a certain timeline, but due to reasons like staff leave or health reasons, they might need certain extension. I think we have clarified this.
We've
Yeah,
always
that definitely
given
being considered.
extension.
Yeah, absolutely. And many a times extensions are being granted. Please do reach out. You can keep the relevant teams copied. Moving on to next, member experienced instance where same data is being asked by different people from the inspection teams. Can this be streamlined? I think
So
again we have.
I would suggest that in case different teams are asking same data, you can refer the team member name.
Right.
That I have given this data, same data
So
to
and
so
so.
and so. We will take it from that person.
So as clarified, there is no need to again furnish the same data. Even if you respond or probably attach the relevant email or your response, we take it from the relevant team. Second last question here is members suggest that if any new thing is implemented or new data is asked by the inspection team, which was not being asked earlier in the past 8 to 10 years, they should be given sufficient background or the rationale for asking the said requirement.
See, you will appreciate that the practices in the market are changing from time to time. Member is asking 10 years old thing. So, now referrals are increased. We need to supervise them. The AP activities are increased with the time. Number of APs have been increased. So, as soon as we grow, the requirements also will
Will
be
keep on
changing based on the practices which are being prevailing in the market. But whenever we are seeking any data, we certainly inform that this is what we are verifying and we need this clarification from you. And this is the rule around this compliance requirement. So, of course, we will keep on changing based on the
But
activities.
enough clarity
being
would be
run.
given,
Yeah,
with regards to the rationale for that particular question or
Yes.
rationale for seeking.
Yes.
And even
The
it is
relevant.
not for inspection, even we look at as an entire industry also, various structural changes has happened.
Right.
Because it was the need of our, so.
So moving on to the last question, with high penalty these days, some penalties like client code modifications, penalties are levied even if it is the first time without taking this into consideration that it's the first time. If possible, exchange should identify first time violation instances separately and issue warning instead of penalties.
See, all members know that this client code modification is taken very, very seriously. Therefore, the penalty is also very, very high towards this client code modification. So as of now, if we do not levy any penalty, then we will be levied a penalty. So
Obviously, these are rule-based penalties, so there is.
like, for margins, incorrect reporting initially, we used to charge 100% of the incorrect reporting. The value of penalty used to be 100% of the value incorrectly reported. And in the recent past, we did not levy any penalty. And then we were questioned by the regulator. So therefore, we had to then abide by whatever compliance requirement or penalty structure exists. We need to do that.
And we have clarified earlier as well, there are certain rule-based penalties. So there is no dispensation as such which is available at exchanges end, as it is being mandated by the regulator.
Yeah.
Point taken, but I don't feel that there is any leeway for the time being on this particular piece.
Yeah.
So with that, we end our today's session. A big thank you to all the members who have raised their questions. And as I mentioned in the beginning of the session, we have received over like closer to 1,000 questions so far across the 12 webinars that we have done. More than 3,500 people have participated in these webinars. So it's an overwhelming response, and we look forward to do more such sessions. I've been mentioning earlier as well, if there is any specific topic or specific area which you feel more clarity is being required, do reach out to me, do reach out to the relevant RMs. We'll be happy to take it up in our next session. Thank you and goodbye.
Thank you
Thanks,
very
you.
much.
Thanks,
Thank you very
Anish.
much.